Zimbabwe has long grappled with economic instability and hyperinflation, a situation that has deeply affected the daily lives of its citizens. The country's economy has been in turmoil for decades, with inflation rates reaching astronomical levels and eroding the value of the local currency. In response to these persistent challenges, the nation embarked on a new financial chapter with the introduction of the Zimbabwe Gold, or ZIG, currency in April 2024. This new currency was designed to be more stable and reliable, backed by the country's gold reserves. This ambitious move aimed to rein in hyperinflation, restore confidence in the country's financial system, and pave the way for sustainable economic growth. The government hoped that the ZIG would bring much-needed stability and encourage both local and foreign investments. The launch of the ZIG marked a pivotal moment in Zimbabwe's economic journey, carrying both the hopes and anxieties of a nation seeking stability and prosperity. It was a bold step, reflecting the government's commitment to turning the economic tide. The introduction of the ZIG was met with a mix of cautious optimism and understandable skepticism from the Zimbabwean populace. Many people were hopeful that this new currency would finally bring an end to their financial woes. While some welcomed the prospect of a more stable currency, others remained wary due to the country's history of economic volatility and previous currency reforms that had fallen short of expectations. The memories of past failures were still fresh in the minds of many. The initial weeks and months following the ZIG's launch were crucial in shaping public perception, determining its acceptance, and ultimately influencing its long-term success. The government closely monitored the situation, ready to make adjustments as needed to ensure the currency's stability and acceptance. The ZIG's value proposition rests on a multifaceted backing system designed to inspire confidence and stability among investors and the general public. Unlike traditional fiat currencies, which are not backed by tangible assets, the ZIG derives its value from a combination of foreign currency reserves, gold, and other precious minerals. This diversified backing ensures that the currency has a solid foundation. This strategic approach aims to mitigate the risks associated with relying solely on any one asset class, potentially safeguarding the ZIG from the fluctuations that have plagued other currencies. By spreading the risk across multiple assets, the ZIG is better positioned to maintain its value even in volatile market conditions. The backing of the ZIG with tangible assets such as gold and minerals is intended to provide a sense of security and intrinsic value. Investors can feel more confident knowing that the currency is supported by real, valuable resources. This approach seeks to address concerns about the potential for manipulation or arbitrary devaluation that have plagued fiat currencies in the past. By having a tangible backing, the ZIG aims to offer a more stable and reliable alternative. By linking the ZIG to assets with inherent worth, the government aims to foster trust in the currency's stability and long-term prospects. This trust is crucial for the currency's acceptance and success in both domestic and international markets. Despite the government's best efforts and the ZIG's robust backing, the currency has faced significant headwinds since its introduction. The authorities have tried various measures to stabilize the currency, but the challenges have been persistent and multifaceted. By late September 2024, the ZIG had experienced a depreciation of over 40% against major international currencies like the US dollar. This sharp decline has raised alarms among economists and financial experts who are closely monitoring the situation. This depreciation has fueled existing public skepticism about the currency's stability, making it difficult to gain widespread acceptance as a reliable store of value. Many citizens are wary of the ZIG, fearing it may not hold its value in the long term. The depreciation of the ZIG has had tangible consequences for ordinary Zimbabweans, eroding their purchasing power and fueling inflationary pressures. Everyday expenses have become a significant burden, and families are finding it increasingly difficult to make ends meet. The cost of imported goods, which are often priced in US dollars, has risen significantly, impacting the affordability of essential commodities and putting a strain on household budgets. This has led to a growing reliance on the US dollar for transactions. This situation has undermined public confidence in the ZIG and hindered its ability to effectively replace the US dollar as the preferred currency for daily transactions. The ongoing struggle to stabilize the currency continues to be a major challenge for the Zimbabwean government and its citizens. In a bid to address the challenges facing the ZIG and stabilize its value, the Zimbabwean government has implemented a series of measures. These measures include maintaining full reserve backing for the currency, ensuring that every ZIG in circulation is backed by a corresponding value of foreign currency reserves, gold, and other assets. Additionally, the government has introduced tight monetary controls to curb inflation and manage the money supply, aiming to prevent further depreciation of the ZIG. Despite the government's proactive measures to stabilize the ZIG, public skepticism persists. The memory of previous currency reforms that failed to curb hyperinflation lingers in the minds of many Zimbabweans. The government's efforts to promote the ZIG have been met with resistance from some quarters, particularly those who continue to prefer transacting in US dollars due to their perceived stability and reliability. Section 5. Ripples of Uncertainty. The impact on Zimbabwean bonds. The depreciation of the ZIG has had a significant impact on Zimbabwean bonds, particularly those denominated in the local currency. As the ZIG loses value, so too does the value of these bonds in the eyes of investors. This depreciation erodes investor confidence and makes Zimbabwean bonds a less attractive investment option. The depreciation of the ZIG has increased the risk associated with holding Zimbabwean bonds, leading to a decline in their market value. Investors concerned about further currency depreciation and its impact on their returns have become more hesitant to invest in these bonds. This lack of demand has pushed down bond prices, making it more expensive for the government to borrow money and potentially hindering economic growth. Section 6. Navigating the exchange. Staying informed and safe transactions. In light of the ongoing developments surrounding the ZIG, staying informed about currency updates is crucial for individuals and businesses operating within Zimbabwe's economy. The Reserve Bank of Zimbabwe, RBZ, and the Ministry of Finance are the primary sources of official information regarding the ZIG, including any policy changes, exchange rates, and regulations. When exchanging currency, it's essential to do so through authorized channels, such as banks and licensed foreign exchange bureaus. These institutions are regulated and provide a safe and reliable way to exchange currencies at transparent rates. Avoid engaging in unofficial currency exchanges, as these can expose you to the risk of fraud, unfavorable rates, and legal consequences. Section 7. The road ahead. Challenges and opportunities for the ZIG. The journey of the ZIG is still in its early stages, and the currency faces significant challenges in gaining widespread acceptance and achieving stability. Public skepticism, fueled by past experiences with hyperinflation and currency volatility, remains a significant hurdle. Building trust in the ZIG requires sustained effort from the government, transparency in its economic policies, and tangible improvements in the lives of ordinary Zimbabweans. Despite the challenges, the introduction of the ZIG presents an opportunity for Zimbabwe to break free from its cycle of hyperinflation and economic instability. By addressing the underlying economic issues, promoting fiscal discipline, and creating a conducive environment for investment, the government can foster the conditions necessary for the ZIG to succeed. Section 8. Conclusion. A currency's journey towards stability. The introduction of the ZIG represents a bold step towards economic stability for Zimbabwe. While the currency has faced its share of challenges since its launch, the government's commitment to its success and the ongoing efforts to stabilize its value offer a glimmer of hope. The path to establishing a stable and widely accepted currency is arduous, requiring sustained effort, public trust, and sound economic management. The success of the ZIG will ultimately depend on the government's ability to address the root causes of Zimbabwe's economic woes, restore confidence in its financial institutions, and create an environment that fosters sustainable growth and prosperity. The journey of the ZIG is a testament to the resilience of the Zimbabwean people and their unwavering hope for a brighter economic future. Stay savvy and subscribe. Thank you.